Hey everyone, welcome. So, when you buy a stock, you're basically stepping into a big marketplace, right? But what if I told you there are actually two completely separate markets for every single stock out there? Seriously. And understanding how they work is the key to, well, understanding how Wall Street really works. So, let's get into it. All right, let's start with a really simple question. Think about that awesome local coffee shop or restaurant you absolutely love, the one that always has a line out the door. Why can't you just go and buy a piece of that business, a share in its success? I mean, it seems like a no-brainer investment, doesn't it? Well, there's a very specific reason you can't, and it's the secret to unlocking this whole thing. So the short answer is that the company probably isn't listed on a stock exchange. Simple as that. If a company isn't listed, its shares just aren't out there for the public to grab. And that one little fact, it points to the most fundamental split in the entire business world. And here we go. Your ability to buy a piece of any company boils down to this one question. Is it a private company or is it a public one? That single classification changes literally everything about who gets to own a piece of the pie. Okay, so let's really break down what that means. What's the real difference between a private and a public company? It's all about who owns it and who can get access. A private company, you see, is owned by a really small group of people, maybe the founders, their family, or a handful of private investors. Their shares are not listed anywhere for you to buy. A public company, on the other hand, has made the huge decision to sell off a portion of its ownership to, well, anyone, people like you and me. And they do this by listing their shares on an exchange. So the bottom line is, you can only trade stocks of public companies.
Okay, so let's say a company decides it's ready to go public. Where do these new shares even come from? This is where we step into the very first marketplace, the primary market. This is where a stock is born.
To make this super clear, let's follow the journey of a made-up company. We'll call it ABC Limited. Now, imagine ABC Limited is doing great, but it needs a huge injection of cash to grow. To build new factories, hire a bunch more people, that kind of thing.
So to raise all that money, the company decides to have an initial public offering, what everyone calls an IPO. This is the very first time it offers its shares to the public. And in this first sale, you, the investor, get to buy those brand new shares directly from ABC Limited itself.
Just think about how this works. It's a straight line. Your money goes directly to the company so it can build those new factories. And in return, the company creates brand new shares and puts them right into your account. The key thing here is the sale is happening from the company to the investor.
And this whole process officially defines what we call the primary market. It's the place where stocks are literally created and sold for the very first time. The biggest takeaway is that it's a direct deal between the company that needs the cash and the first wave of investors.
And this isn't just theory. It follows a very real timeline. For our company, ABC Limited, they might announce subscription days on August 19th and 20th. That's your window to get in on the action. Then, for a few days, the company sorts through all the orders. By August 27th, boom, the shares land in your account. And then, maybe a week or two later, those shares finally get listed on a stock exchange for everyday trading.
But what happens after the IPO? Once those shares are officially listed on an exchange, they enter a completely different universe. This is the second marketplace, and it's the one most of us think of when we hear the stock market.
Yep, this is the secondary market. It's the platform, like the New York Stock Exchange or the NASDAQ, where those shares can now be bought and sold every single day by millions and millions of investors all over the world.
And I want you to notice the huge difference in how things flow now. The company, our ABC Limited, is totally out of the picture. They're not part of the transaction anymore. Now, it's just a trade between one investor who wants to sell and another investor who wants to buy. The stock exchange is just the middleman connecting them.
This is such a critical rule to remember. Once you're in the secondary market, if you want to sell your shares of ABC Limited, you don't go back to them. You're selling to another person who wants to invest. The company already got its money from the IPO. Now the shares are just changing hands between investors.
So our formal definition for the secondary market is pretty simple. It's the marketplace where investors trade already existing stocks with each other. The company isn't involved at all. This is where all the daily price swings and all that trading action you see on the news happens. So there you have it. Every single publicly traded stock leads this kind of dual life. It's born in the primary market, and then it spends the rest of its days being bought and sold in the secondary market. Let's put them side by side one last time to make it crystal clear.
This table really sums it all up perfectly. Let's just walk through it real quick. First, who are the participants? In the primary market, it's the company and the investor. In the secondary market, it's just investor to investor. Okay, what about the transaction itself? Well, in the primary market, the company sells brand new shares. In the secondary, investors are just trading those existing shares back and forth. Next, the intermediary. No exchange is really needed for that first sale, but the stock exchange is absolutely essential for all the trading that comes after. And finally, and this is the big one, the purpose. The primary market exists to raise money for the company. The secondary market exists to provide a way for investors to buy and sell.
Honestly, understanding this difference is the foundation of investing. A stock's journey starts in the primary market, but for almost all of us, our own journey as investors happens almost entirely in the secondary market. So the real question is, knowing this now, how does it change the way you look at the stocks you're buying and selling every day?